Welcome to Wealth Mavericks. On today's episode, we're talking about why tax savings are not always black and white and why the best tax strategy is about far more than simply this year's taxes. I hear that word a lot. I heard about this loopholes. Like, we don't use loopholes. We use the system as it's designed.
There's no magic wand. There's no snapping the finger, right? There's a process. Building wealth the right way, there's a process.
Welcome back to Wealth Mavericks. Today I have Bob with me. Bob, glad to have you here.
Thanks, Erin. Appreciate you having me.
Today we're talking about, unsurprisingly, tax savings, but not just any tax savings, immediate tax savings. And specifically, why tax planning is not always as black and white as people want it to be. But to the listener, don't be discouraged. Six-figure tax savings are possible for every member in year one. But for many, that's not quite good enough. Because we'll often hear members say, give me everything you've got. Tell me exactly what I can do. If I make this move, what will it save me in taxes? And sometimes we can answer that very clearly. But other times, the answer is more nuanced and it can depend on a lot of different factors. So today we're going to talk about what parts of tax planning are black and white, what parts are more gray, and why the goal shouldn't be chasing one-off tax savings, but instead putting the right plan in place to build wealth intentionally with tax savings as a powerful byproduct of doing things the right way. I hear you say that a lot, Bob. And this topic stems from conversations we've had recently with multiple members. They know their tax bill this year is going to be huge, and they just want to do everything possible to get it as low as possible. And they want us to work our magic, so to speak. And they really are hoping that there's some magic wand that we can wave to get their tax bill super, super low. So Bob, to start off, when someone says that, like, I want to get my taxes as low as possible this year, where do you start? What is the first thing you want them to understand?
So that's such a powerful question. And the reason being is that I think it starts with the process of expectations, understanding kind of what do we mean by tax savings, right? And you used the word hopeful. And what's happening in this conversation is when people start to find out I can actually have tax savings, they start getting very hopeful. And hope is not a plan. And so what we want to do is set the expectation that what is your end goal is to grow your wealth. You want to grow your wealth and you want to lower taxes because taxes are slowing that drag, right? They're dragging your cash flow back because those are expenses going to the government, whether it's local, state, or federal. So what you really want to do is grow your wealth. The IRS tax code is written specifically for that. They want you to grow your wealth. And so you've also heard me say multiple times that the IRS is your business partner. And you can always see the body language of when we have that conversation or when I bring that up. You can tell people their body language is like, right? They're like, no, it's immediate rejection. And the reason why we say that is because the two need each other. You need the IRS because it is a legal system. The IRS tax code is a legal system. They're giving us guidelines and directions of what we can do. But they need you. They need your capital. They need you to be able to put your capital to work into the system, capitalism, to purchase assets that grow your wealth. As a byproduct, they give you areas of the tax code to use tax savings in those assets. So every asset has a different type of tax benefit. So that's not really what members want to hear. I mean, it's what they want. That's not what they want to hear. They just want to hear, yes, you can save me money on taxes, how much, and then they want to run with that. And that's not the case. And I've told many members that you can't just do something because there's a tax benefit. There has to be a other benefit first. And the byproduct is a tax benefit. And that's how you can really hide in plain sight, if you will, meaning that you and your business partner, the IRS, are working in unison. And that's how you can reduce your tax liability, build your wealth, but more importantly, stay on the right side of the law.
Mm. So it sounds like a lot of them are just putting the cart before the horse. They want the tax savings without thinking about what does the IRS give us to incentivize us? And then the reward is lower taxes, but you can't lead with that. You have to lead with where are you going to put your money and why.
Yeah.
So why do you think that people make it out to be so black and white, or their expectations are so maybe unrealistic? Where does that come from?
I think it's a pain point. I think they're just sick and tired of it, right? I
Mm,
mean, when you have a pain point in your life, just think about your own situation or my own situation. There's things where I'm like, enough's enough. And finally, you make a decision. You find a group or a team to help you with that decision, terra firma. And then all of a sudden you're like, yes, I checked that box. Think about it from a doctor's perspective. Their entire life is a checkbox. Every time they meet with the patient, they're doing compliance work. They're checking the box, right? Making sure or ruling things out to rule things in. What are the next steps, right? And when they go and bill for the services, it's a checkbox, right? And so their entire life's a checkbox. You get ingrained with those habits that you start running the rest of your life like a checkbox. So they hired us, check the box, we're gonna get tax savings. Time out. We are, but there's some things we got to do first.
mhm.
Right. And then there's no magic wand. There's no snapping the finger. Right. There's a process. Building wealth the right way. There's a process. And it's not one particular asset. It's a grouping of assets. We call it the asset buddy system. And that's what the wealthy do
Mhm.
because that's what the tax code tells you to do. So that's kind of our when we go through this process, again, it's not what people want to hear. Because
Yeah.
they just want to hear I'm going to get my money back. Awesome. And then I get to go do what I want with it. Okay.
Right. I equate so many things in life to health because I mean that's
Huh?
just such an important thing in our lives. And it's like you wouldn't walk into a gym and meet with your personal trainer and be like, I have 100 pounds to lose. And then they tell you, well, it's going to take time and it's going to take all these different steps, but eventually you're going to get there and you're going to feel so much better like pretty soon, which that is where some of the tax savings comes in pretty quickly. But long term, it's going to take the
Mhm.
work. Like you probably wouldn't walk out the door and be like, well, I'm not going to do it. It's like the time's going to pass anyway. So you might as well put in the right work to make the right outcome happen.
Yeah.
But there are parts of tax planning that are more black and white. So
Huh?
what are the things, let's talk about that. What's more black and white? And then we'll get into the gray.
Yeah. So I think the things that are black and white are what they already know, right? They're putting money into their retirement account. All right, great. If they own a practice, they know they can write off their equipment. They can depreciate their equipment. A lot of our doctors have been promoted this short-term rental strategy. You go buy real estate, Airbnb it, right? All that sort of stuff. And so they're looking for that instant gratification, those steps. And that's
Sure.
the way the law is written today. Right. Okay, if I have a home office, I can probably deduct it, but it could be black and white or it could be gray. I think the reality is that when you look at the tax code, there really is no black and white. And the reason being is that equates to more of a 2D visual of the tax code. But the tax code is written in 3D. And here, let me explain what I mean by that. If you go onto Google or ChatGPT and say, okay, I want tax savings. Well, that's a pretty small prompt, and so Google's going to or ChatGPT is going to give you what it thinks you mean based on tax savings. It's no different than Erin. Someone comes up to you and says, "Erin, I want tax savings." You're just going to give them what you know,
Yeah.
right? But the tax code's not written that way. It's written in 3D. There's an intent of what you're doing. When you actually look at the tax code, you open up some of these publications that the IRS has written to explain the areas of the tax code. They use vague words like generally you can, you may. They use these terms purposely because they're saying, hey, as your business partner, depending on how you use this, you could get a benefit. Or how you use this, you may not.
Mm.
It's your intent. It's a legal system. Think about driving on the freeway. There are rules. There's a speed limit. And we all know that everyone can go 5, maybe 10 miles above the speed limit, and that's kind of normal. But all of a sudden, a police officer pulls you over for speeding. You're only going 5 miles over the speed limit. You're like, I was only going 5 miles over the speed limit. They're like, yes, ma'am, but what's the speed limit? 60? And you were going 65 in a 60, right? Well, yeah, technically he's right.
Yeah.
Right? So the intent of the law is how you're trying to do it. Now, if you're the only person on the road and there's no kids and, it's all, then they may not do anything about it. Right.
Sure.
And I'm not saying this like the IRS is looking for you to go 5 miles over speed. They're like, you're taking $5 deduction more than what you should be. Not saying that. I'm just saying that there's an intent in how you do things. And that is the key to this. And so you have to have a plan in place. You have to have the end in mind. I want to hit here. The same thing when we go on a road trip. A lot of the things we do in our developing of this plan is we build out things that are very similar to the road, right? So we build out cash events. We create maps for these cash events, whether it's cash flow map, asset map, debt map. And it's all part of this thing we call a member atlas, which is a book of maps. And then when we start executing and going through the plan of implementation of the plan, we have a GPS because it takes you guide by guide direction to where you want to go. But that's not a straight line. And sometimes there's detours in that process because of the intent of implementing the plan, or the tax laws change, or your situation changes, whatever. What happens when there's road work in that you got to get rerouted? That is exactly the whole point of when you're looking at trying to build wealth and using taxes. Taxes are a tool, just like your cash flow or your paycheck is a tool, just like real estate is a tool to help you get to your wealth goal. And when viewed that way, then you kind of understand more or less of, okay, I have different tools and I'm going to use each of these in the right order. I'll give you an example. I was just watching a YouTube yesterday on health. You had brought up health, and this guy is like beefed out, right? He's got this real deep voice and more of an accented voice, European accent voice. And he said, look, here are the 5 things that you can do to lose weight. I was, of course, right. I'm 30 pounds, 40 pounds overweight, 30. And so obviously I'm like, trigger, watch. And it was so funny, Erin, because I knew we were going to do this. And I'm like, his whole point was you can do all 5 of these things. The first step was the order of how you eat your food, because your body responds to your food and allows you. So he said the first thing you need to eat on your plate is your proteins. Your protein starts getting your body going, and then you eat your vegetables. And then that triggers another part of your body. Then you can eat your carbs because your body's already in this running the motor type perspective. And so those carbs are used as fuel rather than eating carbs first, and now they're being stored. And so when it comes to assets, we talk about this the same way. You can use the tax code, you can use assets, but they need to be structured and organized in the right way. And so your first question is, how do we set up kind of this whole plan of tax savings? And my first thing was, just real communicating expectations. And so the first video people watch, and then the discovery conversation we have is, if we were to gamify the tax code, most people's tax plans level 1 or 2 of a video game. Their earning ability is a level 7 or 8. The first thing we're going to do is try to get their tax plan to meet their earning ability. Now, what they heard is, okay, cool, I'm going to get tax savings. What they didn't hear is my intent of saying expectations based on your situation, based on what we're able to do. It may take us a year. It may take us 3 years to get your tax plan to match your earning ability. But none of that is what they would want to hear. What they hear is, I want to go from level 1 or 2 to 7 and 8 right away.
Yeah.
Right? But you got to go through each level. There's no like secret passageway when it comes to this.
Yeah.
And so that's hard for people to comprehend when they don't know this area. And so that's what we try to set as expectations is, hey, let's focus on wealth, and then we'll get taxes as a byproduct. That way it also minimizes the audit potentials, because our intent in the documentation of the intent is try to make wealth, try to build wealth, try to use things that the IRS gives us as assets that have tax benefits.
Mm.
Totally different thought process and idea and approach to it, versus some are, hey, let's go tax savings, tax savings, tax savings. Well, come on, the IRS knows that. Let's look for loopholes. There are no
Yeah.
loopholes.
I hear that word a lot. Like, I heard about this loophole. It's like, we don't use loopholes. We use
Yes.
the system as it's designed. But
Yes.
it isn't a straight line. People
Mm-mm.
want it to be, but it's not.
Right.
There's a
Correct.
lot of nuance there, and it's a lot to navigate for one person. It's
Yeah.
a lot to navigate for us. We talk
Yes.
often very transparently on here about how what we're doing here is not easy. And it's
Mhm.
why not a lot of companies are doing it, because it takes a lot
Yeah.
to have that expertise and all those different partnerships that it takes to serve people at this level. But it's worth it. Just like it's
Yeah.
worth it for the member to start on the journey now. And we hear that often, like, oh, I wish I'd found you years ago. I wish I'd started this years ago. Well, yeah, I mean, don't we all? But we're here today, and
Yeah.
now's the best time to start it. And so, without getting too far into the weeds of the gray area, and when we say gray, we are not talking about like, being on the skirts of what's legal or be doing anything shady. It's more like the nuance part. Like everything we
Correct.
do is obviously very legal and laid out. But if someone says like, okay, if I put 100,000 into this, why can't we tell them, okay, it's going to have this benefit on your tax? Like, again, without getting too far into the weeds, because that's what people want.
Yeah.
Like, if I invest in this, what will it mean? Why can't
Yeah.
you give them a straight answer?
Well, in that it goes back to the intent. It goes back into how can we document it? If we have a dual physician household, and we have a lot of members that are such,
Mhm.
and they've got kids, and they're working at 10, 12-hour days, 6, 7 days a week between the two of them, right? And they're kind of tag teaming and passing kids, and they have some support, nannies, that kind of stuff that help during the day or whatever. When do they have the time to be able to really communicate to the IRS, their business partner, that they're trying to run a business?
Mm.
They can't. It's impossible. So that $100,000 cannot go in. So what we have to do is say, okay, this $100,000 can go into this particular asset and start creating some cash flow or passive income that actually allows you to have additional dollars. So maybe one of you can work less for equal dollars.
Mm.
Right? And then looking at other cash flows or other expenses, or paying debt down to free up cash flow, and looking at that and saying, okay, hey, if we were to pay all your debt down, minus the mortgages, and that would free up your cash flow to be about $3,500 a month. Add that to the passive income. Well, maybe that allows Mr. or Mrs. to be able to work 5, 6 hours a week less. That 5 or 6 hours a week less could actually be driven on to trying to build your business, because you've already shown you're working those 5 hours. Now we just redirect it into trying to build your business. And we can show the intent of that by building out corporate minutes and documenting that time, that material participation. But that's not what people want to hear when they, hey, I have $100,000. What kind of tax savings can I get?
Yeah. Okay.
Right? But that's what we're trying to do, is so we can always get that tax savings, because we're always going down the process or the pathway of the intent to do wealth building. And here's why wealth building, because there may be some members, and we've had members ask that, because in every asset, whether you buy an apartment complex or you invest in a business or it's a short-term rental, every single one of those examples, there are taxpayers that asset affects. What does the IRS want? Tax revenue. Why? Because the government needs that revenue to run the government. So if you're investing in assets, you're encouraging taxpayers to be part of that particular asset. Your capital is creating that tax revenue. That's why as a business owner, a traditional business owner, you're going to get way more tax benefits because you're hiring employees. You're hiring independent contractors that have taxpayers that are funding the system. So the IRS says, hey, I'm going to invest in you. I'm going to give you more tax benefits so your cash flow can help build your business and you can create more cash flow for me.
Mm-hmm.
It's basic business principles. We focus on taxes because that's what we are sick of, that expense. But debt is an expense. Cars are an expense. Food's an expense. Kids are an expense. We don't just get rid of them, right? So hopefully put them to work.
Days
Then
when
you
we
turn
want
them,
to.
yeah, put them to work. You turn them from an expense to an asset.
There you
Right.
go.
So anyway, so those are some of the gray areas, if you will. The intent of what we're trying to do is that there is really, and you don't want it to be a black and white answer. You really don't. Because if it's a black and white answer, guess what the IRS is going to do? They're not going to have a great tax benefit because everyone's going to do it. And that means everyone's going to save money on taxes. And what does the IRS not get? That tax revenue, because it's a business. The government's a business. So if you're working for it, if you're working hard for it, you hire people, you're paying for it, and you're learning the business of business, and you're going through all these steps that are documenting that you're taking all these steps. It's really hard for the IRS to say that you're trying to look for loopholes.
Yeah.
We're actually putting time in the business, right? And that is the key that we want to try to make sure people understand.
So the IRS gives it to us, but they're not going to offer it up on a silver platter because,
Not
like you
at all.
said, if it were just easy, everyone would do it and that would defeat the purpose. But they also want to incentivize it for the people willing to put in the work. And so, to wrap up, what would you say to people who are listening, who are not yet a member, not yet doing the work, and they're weighing, is it worth my not only investment with Terra Firma, but also the time that I will need to put in to learn these things, implement these things, get this engine going? Should I do that, or should I just pay my $300,000 in taxes each year and call it a day? What would you say to them?
So let's look at their profession. They invested in their profession. They went to school. They went to doctorate school. They became an MD. How much did that cost? Then they went through residency, right? They went through fellowships, and they went through all this process before they got their real big paying big boy job, if you will. But they're a big boy from the very beginning, right? I mean, they are in the trenches. But then they get the financial payback for all that time and energy. That was an investment in you. You are the asset. You are the one that's returning that. And now you're returning on that asset, that investment, and now you got profit, and that's what the IRS is taxing. You're no different than a piece of property, right? An apartment complex. But how do you know to run an apartment complex? I've never owned an apartment complex. I'm not going to put a tool belt on. I could barely plunge in my toilet, right? Gets everywhere. It's disgusting, right? I would call a plumber, right? It's the same mentality. So why in the world does anybody think they can just walk in and save money on taxes without any work involved or investment involved? Can't. You can't. My first real job was a paper route. That was the hardest I've ever worked for money. And it was 7 days a week. I was on a bike. I always had to fold my papers. I had to ride it. And each day as the week went by, the paper got bigger and bigger. To Sunday, I had to use our Suburban and tailgate and stack it up. Right? But when I got that $400 in cash at the end of the month as a junior hire, and I got to pay for all my own stuff, there was a pride in that. But it was just newspaper. But it was more than that. You're just a no, it's so more than that. It's just real estate investing. No, it's so more than that. We got to stop cheapening the ability to grow wealth and look at it valuable from in the mirror of how we got to where we're at and we had this pain point.
That's so inspiring, Bob. Truly. And what you said about how you were going through school and investing this money and this time I had a member recently say literal blood, sweat, and tears to become who I've become. And that's why it's so painful now to give so much of it away when I'm serving these people and I've put so much in. But you said how you were a big boy or a big girl, whatever, from the beginning because you were on that path. And I do believe that there is such an energy to that decision that you've made to draw a line in the sand and say enough is enough and I'm going to take a different path, do things differently, put in the work, knowing that I have that vision for my future and my legacy and it is all going to pay off.
Yeah.
Even if we can't wave the magic wand and make it happen right now, because then like you said, you would cheapen it. Everything worthwhile in life takes consistent work to make happen. But is it not worth it? Of course it's worth it. That was so good, Bob. Thank you. Any last
You're welcome.
words?
No.
Yeah.
Drop the mic on that.
Yeah, I agree. Boom. Okay, so Doc, as much as we wish it were different, tax planning just isn't as easy or as straightforward as we want it to be. But we just talked about why we don't even want it to be. It's worth it. Just like most things in life, good things take time to build. And we do often hear, why didn't I start this years ago? But the next best time is today. You got me all choked up, Bob. And once you've started, you are now on that path to lower taxes, increased wealth, and building your future with more intention than you ever have before. So Bob, thank you so much for all of that. Doc, thank you for listening. We hope you found it valuable, and we look forward to seeing you next time. Until then, go be a wealth maverick.